the value that will be unlocked when money can really move 24/7 across the globe is something that most people just don't comprehend.
How does it actually fit within a payment system?
It turns out that businesses really don't care, they shouldn't, about the rail. And I think the industry has got to that realization on the payment acceptance side some time ago. And I think right now on the crypto side, we're coming to the same realization that businesses oftentimes really just want to focus on the outcomes.
Are we innovating in the right place?
The plumbing is very key, but it's not sufficient. It's necessary, it's just not sufficient.
What are the key kind of building blocks that need to just kind of get tackled?
Views are personal, not investment advice.
This is Money Code. It's a show where we decode stablecoins and agentic finance. I'm Chuk Okpalugo.
And I'm Parekh. And today we're joined by Davi Strazza, Chief Business Officer at Lightspark. Welcome, Davi. Let's jump in. I think a lot of folks know you as this 11-year veteran at Adyen. You've obviously helped grow the business for from $30 billion to over $1.3 trillion in payment volume. And you're now at this 50-person startup called Lightspark. It'd be awesome just to learn more about what changed, what helped you lead to this transition into this new world of payments that we're in right now.
Yeah, no, first of all, thanks guys for having me on the show. It's an honor. I think we're now at a point in Fintech where everything is aligned. You have technology that allows you to sort of rethink infrastructure. You have regulatory frameworks that allow folks to sort of build with confidence. You have customer and merchant demand to experiment with new technology. And so it's a really interesting point in time where it really feels like if you've been in Fintech for a long time and if you've been familiar and building on a traditional infrastructure and frustrated with them, you're now telling yourself hey, we can actually change this, right? And going back to Adyen, Adyen is a phenomenal business. I have nothing but amazing things to say about the product, about the team. But I think Adyen has been optimizing payments for a long time. And it's probably one of the companies that have done that better than any other. But again, this is a time where I feel like we've got a chance to really rethink how money moves. And I just got really, really tempted about the idea of rebuilding infrastructure, about looking at things from first principles and really challenging what's out there and working with customers, working with regulators to sort of build something that is better, that is durable. And that's exactly what Lightspark is doing. And so I think even though, again, Adyen is phenomenal and it will continue to grow, my entrepreneurial sort of instinct sort of led me to team up with David and build Lightspark and sort of rethink infrastructure from the ground up.
Awesome. Let's talk about Lightspark. And I think it'll be helpful to talk about what Lightspark is doing in terms of solving the payment problems that you have been optimizing for, or you've been solving already at Adyen, where that, okay, this is, Adyen has already reached a tremendous scale, and there's still some fundamental things that are in need of being fixed, I suppose. And so let's talk through what Lightspark does in terms of those kind of fundamental changes to the underlying infrastructure of payments.
Yeah, so Lightspark at its core is really building fintech infrastructure. And we're focused on a few problem spaces. The first is global money movement. It's 2026, and there are countless examples of people trying to move money across borders or businesses trying to move money across borders and hitting walls, paying very steep fees. And so it's just really difficult to move funds across the globe easily, cheaply. And so that is one problem space that we attack and we're focused on. The second is really the convergence of the traditional rails and crypto rails. We are, like I said, now in a really interesting time where it feels like there's a real window for us to sort of look at the financial system across the board from the ground up and really try and optimize things based on how those new technologies converge. And so that is another problem space that we are trying to solve, like trying to operate in. Like, how do we take the best out of both worlds and deliver a product that is really exceptional? And then finally, it's really about control, like putting control back in the hands of the merchants, the businesses, and putting control back in the hands of consumers. And then we can unpack all of those things. But again, Lightspark is essentially sort of building infrastructure that helps people move funds across the globe easily, help businesses disperse payments to contractors, to suppliers across the globe very easily, whether that's on fiat or in stablecoins, for example. It is really building on and off-ramp infrastructure to make it so you can leverage crypto rails, but then also connect with the traditional infrastructure out there across the globe. And finally, we're building infrastructure to help merchants optimize those rails. Again, be in control, like don't be hostage to sort of one platform that doesn't really interoperate with others. And consumers. Part of what you can do at Spark, for example, is to spin up like a self-custody wallet that puts the control of finances back in the hands of the user, as opposed to what happens on a custodial setup. So, I mean, lots to unpack there, but I'll stop it there.
Yeah, let's start with just maybe a key flow. And you can choose either like a cross-border or maybe it's merchant acceptance. But how does Lightspark work under the rails? And so you mentioned on-off ramps, and then there's I think most folks think of Lightspark as building on Bitcoin, building on the Lightning Network and the Spark chain. It's not quite a chain, but I think you can help us understand what exactly it is. And then stablecoins, because Bitcoin is a substrate of Lightspark, of Spark and Lightning, but then you also support stablecoins as well. And so I think folks who are not as familiar would love to understand, okay, how do all those things fit together?
Right. Yeah, that's a really good question. I think when people think about digital assets, most folks are just really focused on the trading component of it. We look at it more from a network angle. And if you're trying to move money around, if you are here in the States and you're trying to send USD or send money to someone in Mexico or in Brazil, again, that is today broken, it's difficult. And when it works 24/7, historically, I mean, you had to pre-fund account, you had to come up with all sorts of creative solutions to make it so that experience felt like less, difficult for businesses and users. When you start leveraging crypto rails, I think it begs the question, like what options you have in front of you and what are the pros and cons of those options. One of the reasons why we started to build largely on top of Bitcoin is Bitcoin has properties like no other blockchain out there, right? It is fully neutral. There's no individual, no institution, no group of people that can control it. It is, again, as a network, as optimal as you can possibly get. And the reason why we built Spark is, of course, like when you look at Lightning, whereas like it works very nicely for a number of use cases, there are certain use cases that would not be fully compatible or where you're going to hit some friction. And so Spark really is our answer to that. I mean, it's a Bitcoin O2. It's backwards compatible to Lightning, and so it offers things like unilateral exits to Bitcoin at any point in time. And so again, it puts control in the hands of users. But it really checks all the boxes that you want in a large-scale payments-enabled blockchain. And so I think if you break down in pieces, we look at Bitcoin as a phenomenal network to move money. We leverage Lightning for that. But that is not the only option. It's not the only way we move money around. We can also use stablecoins for that matter. And why would you want both? Probably because of liquidity, right? There are markets out there where it's difficult for you to get access to dollars, an example. And Bitcoin turns out to be one of the most, or actually the most liquid digital asset out there. And so it has the benefit that that makes it so for conversion of currencies and easy of trading. I mean, you get a lot of flexibility, you get a thin spreads, and it's really optimal for money movement in general.
Yeah, I mean, I think liquidity is like always the hardest thing when you're building payment systems from the ground up. And to your point, you get to piggyback off of like the most liquid, traded, in terms of trading volume asset in Bitcoin. I think a common question that a lot of people think about is, well, Bitcoin's really volatile. Like it's, constantly moving. And, if we're building payments, we want some stability as well. Or we want to be able to make sure that if $100 is sent overseas, that it's actually $100. Maybe if you can unpack just like the logic behind, Bitcoin, but also just like maybe for those folks who are saying, hey, like it's a volatile asset, how does it actually fit within a payment system and what you guys are doing differently to enable that?
Right. Well, I think if you look at the flows, if you look at how money is movement, we use Lightning to move Bitcoin around, and transactions are essentially processed in sub-second, right? And so whereas the asset itself is volatile, if you look at it and across like any period of time, I mean, if you look at the sub-second where we are actually converting funds back and forth between local currencies, between fiat and Bitcoin, I mean, you're exposed, very minimally, and so we find it very efficient for that purpose. Now, if you look beyond the network, if you look at the currency, if you look at the digital asset as a currency, that's why stablecoins become interesting. I mean, there are places out there, there are countries out there that, of course, struggle with volatility. And in those cases, and stablecoins are very handy as it provides, with individuals holding assets with the stability of the dollar or the euro. What we are trying to build here at Lightspark, again, is really infrastructure that helps people orchestrate. And so, again, there are cases where you're going to have a lot of liquidity depth in Bitcoin. And when that happens, again, that is probably the rail we're going to leverage. There are cases where it may be more efficient to use a stable coin, and so we'll go that route. I mean, business shouldn't need to care about which rail you move funds around, just like consumers don't need to care. I mean, the way we build the platform makes it so that's fully abstracted from businesses and users. And so when our customers come to us and they're trying to move USD to Mexican pesos, we fully abstract Bitcoin from the user experience as well as from that merchant. We take care of that. We manage liquidity on both fronts, and again, we make it so like the exposure that you have on the FX exchange like is really minimal, thanks to again the properties of Lightning and the the management of liquidity we do on both fronts.
Right. What I find really exciting and interesting here is that it's the Bitcoin sandwich. I think people have heard of the stablecoin sandwich, but you guys actually have been doing this before the stablecoin sandwich concept became popular. And the reason it works with Bitcoin in the middle is because Bitcoin is a very highly traded and very highly liquid asset. And so you can get quite tight spreads at a decent chunk of liquidity on both sides, as long as Bitcoin is a well-traded asset. And so you mentioned USD Mexico, where you start with fiat on both sides. And I think you're live with a couple of customers. I think SoFi is one, and maybe you can mention a couple of others where you are connecting the on-off ramps. They're all licensed, and then you have a way of connecting them together such that the user who's using the app, all they see is I'm starting in dollars and I'm sending Mexican pesos, and you're achieving that goal of end-to-end fiat movement, but without showing what's behind. And I think you mentioned Bitcoin can sometimes be the thing that's underneath. Sometimes it can be a stable coin, but at the end of the day, the user just gets a fast payment. Is that how it works? And what other kind of companies do you have integrated into that system?
Yeah, that's precisely how it works. And so again, on a transaction flow, like you're starting from USD and you may want to pay out in Mexican pesos, or you may want to the recipient to receive USDC, or if you're starting from euro and sending funds to the US, I mean, it doesn't matter. We now cover 65 countries where we have connectivity to the local payment rails, RTP, FedNow in the US, Spain, Mexico, SEPA Instant in Europe, Pix in Brazil, UPI in India, you name it. And the idea is that, again, whether it's on the on-ramp side, on the off-ramp side, we make it so transactions can flow across borders 24/7 very efficiently. Bitcoin, like I said, is a phenomenal network. Lightning is a phenomenal network to help move funds around. And to the extent we can manage the conversion of those currencies and the liquidity on both ends, I think it becomes a really efficient way to move funds around. It turns out that businesses really don't care. They shouldn't, right, about the rail. And I think the industry has got to that realization on the payment acceptance side some time ago. And I think right now on the crypto side, we're coming to the same realization that businesses oftentimes really just want to focus on the outcomes. And there are so many cases where at the end side of that transaction, the recipient just really want fiat in their bank account. And so you really need to abstract crypto from the flow to make that work.
Yeah, I mean, as you're talking about this, I mean, I was talking to an import exporter recently, and one way that he actually moves money is like he's literally just taking a bunch of cash and going on a plane ride sometimes because it's just far easier to like move money that way sometimes versus like having him go through the traditional rail. And when you talk to him, he's not necessarily opinionated about crypto or like a crypto maxi by any means, but he's just like, hey, I just want to be really efficient with my operations. Like I don't really care how to do this, but right now it's cheaper for me to buy a flight for an employee, move cash overseas, and then from there conduct that transaction. But ideally, if I could do that without, if I'm having to do all of that, then maybe, maybe I'm open to it as well. So it gets you thinking about like some of the optimizations of like how the world economy can actually accelerate when you can actually move money at the internet speed. But one thing that's really interesting is that you guys haven't stopped at Lightspark at just building the L2, leveraging Bitcoin liquidity. You guys have also started to expand the platform too. Like maybe talk about some of the other pieces of the platform from like Grid to UMA to like other parts that you guys are now building to make it easier for some of these businesses also.
Sure. Just going back to a point you made, like I think the value that will be unlocked when money can really move 24/7 across the globe is something that most people just don't comprehend. And we think of it today like mostly in the context of just P2P, which is happening. And SoFi is one of our customers that is doing that. We're working with Nubank and a bunch of others on a similar capacity. But when you move from a P2P use case to a B2B use case, that's massive. And you don't even need to think about it on a global spectrum. Like even if you look at US domestic only, one of the most challenging things for any business is to deal with the shortage of cash flow or access to lending. And so if you can shorten the time it takes for money to move from point A to point B and put cash in the hands of small business owners, there's just so much power in that. And that is one of the things that really moves us here at Lightspark. But back to your question, Raj. One way to think about Lightspark is Grid is essentially the set of APIs we built to help folks move money around. And so again, we talked about the P2P use case, like we give infrastructure for folks to build remittance products. And that has been live for some time. It's going really well. It has access to 65 markets. It offers the ability for folks to do like fiat to fiat flows and leverage crypto rails for the benefit of efficiencies and speed. But then there's an entire B2B side of the product that is really interesting, that is more recent relative to the P2P. What can be done on the B2B side? First is your internal treasury use cases. Again, for very global businesses, it's very often the case that they want to just move funds across subsidiaries, and that's made really easy thanks to crypto rails that we we can do that here. The second is collections. Again, for global businesses, sometimes they need to issue an invoice that allows someone in Brazil or in Europe or whatever the country, right, to pay in their local currency, but then you need those funds to be settled in the US, in USD. And so again, cross-border becomes the vehicle for that, and crypto rails help, and that's another area of the product that we're building. And then finally, payouts. Think creator economy, think your AR, AP platforms, global payroll, HR platforms. There are so many cases out there where you have to move money from a centralized pool and disperse those funds globally. And here again, you need to strip out all the friction. You need to be able to move those funds fast and cheaply. So there's a compelling reason for users to work with you, but also, again, there are good economics for you to enjoy. So again, Grid brings all of that together. It offers the infrastructure, it offers the on and off ramps capabilities, and it offers flexibility for folks to execute those flows across fiat and stablecoins. So whether it's starting USD and paying out in Mexican pesos, or starting from Euro, paying out in USDC, it doesn't matter. Like we offer all of those things. And then the second block is Spark, is the Bitcoin L2 that we built. And that really functions as the settlement network. There are all sorts of financial experiences that businesses can build on top of Spark, whether that's buy and sell Bitcoin or, like I said, spin up a wallet and build like a mobile app on top of that infrastructure. And the interesting thing is the two infrastructure blocks are converging. The money movement capabilities are converging with the settlement network. And the idea is that you have a very comprehensive stack that helps you build any sort of financial experience that, that involves cross-border capabilities.
Yeah, we mentioned earlier abstracting away all the complexity and the experience being from the user's perspective of just, hey, I've got fiat, I want to send to somebody else who is going to receive a different form of this fiat, and I don't really want to know what's in between. And that is very good for moving adoption forward. But at the same time, you mentioned the platform and the ability to build all these new things and add wallets and so on. And so there's like a learning opportunity, or I guess a learning gap that needs to be filled. I think you have kind of firsthand experience of it. I guess you're 2 months into the new job, right? Can you kind of describe how it is? I think a lot of people will relate who are in your shoes as well. You have a rich, like deep, expert level fintech experience and understanding. How has it been learning about crypto and blockchains and so on? Like what would you give as advice to others who are learning it? How should they approach it?
Yeah. Look, it's been a very interesting learning curve. I'm not going to lie. Having spent over a decade on the payment side and obviously working with the traditional infrastructure, getting familiar with that, you would think that you would know enough about how money moves that if you transition to crypto, you would be smooth sailing. And the reality is it's not. Crypto is a very, very deep space, right? And it's fascinating for that reason. I think a big part of what's going to make crypto successful is to make it so the average consumer really doesn't have to think or understand blockchain, or think and understand the rail dynamics or the chain dynamics. Think of it as a user ourselves, right? I mean, if you have to buy a product or a service, and you have two options in front of you, you can either go to your car or call an Uber and then go somewhere and then pick and choose whatever you want and then come back and spend 2 hours doing it, or you can click 2-3 times on Amazon and have it delivered to your house same day or next day. Most people would choose the latter, even if they have to pay an additional $1 on top of what they would in the first flow. Convenience is really important. And I think in the payments industry, people are obsessed about that. And so whether you look at the consumer facing products, wallets making really easy for people to just buy online with a couple of clicks, or tap to pay. I mean, there's so many examples in payments in the acquiring landscape, in the payment acceptance landscape, where you have a lot of different back and forth movements behind the scenes, but at the surface level, it's really easy. And I think the same needs to happen with crypto. If paying with cryptocurrencies requires that a user goes through like a multi-step process and needs to understand all of the dynamics and the implications of that, if that doesn't change, I think it's hard to think that crypto will scale to the point it deserves to scale. And similarly for merchants, if you're talking to merchants and they need to integrate to your infrastructure, so they can leverage all the goodness that exists in the crypto rails, and they need to fully understand how that works and the chain dynamics and the control dynamics and et cetera. I mean, it's very difficult. That's a big ask. And so in my mind, again, coming to this word, I'm very interested in understanding why the things that are part of the crypto space are what they are, and what are the upsides and what are the benefits. But most importantly, I think we need to focus on what users and merchants really care about. And users care about rewards and convenience. That's it. And merchants care about good economics, running their operations very efficiently. Both of them care a lot about fraud. You need to check those boxes. And so long as, again, those boxes are checked, I think that there's a very, very brilliant future for crypto, because, again, the core properties of crypto are brilliant and are phenomenal. And I think there's no user out there or no merchant out there that won't want to enjoy the benefits of what crypto offers, so long as it's easy for them to use that.
Right. It seems like the wrappers are almost more important. The orchestration and the wrappers and the things that make it have the experience like you just mentioned, i.e. from the user perspective, it's just a simple tap. From the merchant acceptance perspective, it's already plugged into everything that I already know and love. And so I wonder whether, are we innovating in the right place? We speak a lot about blockchains and throughput and permissionlessness and so on. But I guess, to what you just said, do we need to make the kind of acceptance layer kind of work like it does today, which is instant and quick and, really, really simple, and then just plug in the plumbing? And so all of this innovation just happens in the background. You know the plumbing very well. Do you see that as where the opportunity is?
I think there certainly is opportunity there. Those things are obviously not mutually exclusive. Ultimately, you're going to have to do both. I think that what I see, or what I've seen in the past 12 to 24 months, is a lot of focus on ensuring that the rail itself, whether, again, stablecoin rails or otherwise, that is very efficient, that you can actually use it to move funds around cheaply 24/7. And I think there's been tremendous success in getting to that point. I think the next step is really how to take that to scale. And it's easy for folks that are deep in fintech or in crypto to look at what's happening right now and be like, oh, this is great. I mean, I can easily just open my wallet, and then I click here, I click there, or I select my, I select a few things, and money is sent, and it's beautiful. I mean, that's a great start. It's really awesome to see that there's a path to make things work, and there's a path to take all of the goodness in crypto to the real world. But having spent a lot of time on just global payment acceptance and the global usage of traditional rails, I think it's important that we think beyond what's, our own space and how the average user is going to interact with that product, or how the average merchant is going to integrate to that product. And more often than not, again, for a business that is facing so many challenges in terms of cash flow or in demand or the broader economy, I mean, they really couldn't care less about the sausage making. They're really focused on the outcomes. And so I think it's important that we continue to invest so the rails are extremely efficient, resilient, reliable, but ultimately you really need to make it so it's easy for folks to adopt that technology. And I think there's been tremendous progress there. Like I said, one of the things that we invest on the Spark side is on self-custody. Like self-custody was a nightmare for any user to deal with, because, I mean, you had to manage keys sort of independently, and there's a lot of risk in doing so. And if you look at where we are today, like there's infrastructure that makes self-custody fairly simple to access. And so I think it's a path, and I think there's certainly opportunity to continue to invest on access as opposed to just the plumbing. The plumbing is very key, but it's not sufficient. It's necessary. It's just not sufficient.
Yeah. And it's, I'm hearing a couple of different things from you, which is, really interesting to unpack. Like one, you've kind of teased this like paradigm shift in like fintech, that there is like an opening and a window to really change how like money's done fundamentally. And, a lot of what we do today is basically decades and decades of inherited, technology and infrastructure and payment rails. So that feels like one theme. Like second is that you've obviously been at the early days of Adyen and built this business up, and you kind of know what it takes to add elbow grease and like drive network effects and like grow a business also. I guess like now in your shoes at Lightspark, like what do you think Lightspark has to do to then kind of go back to like your early Adyen days and like get that network effect going, and kind of then will and enable this new tech stack fundamentally? And curious any like lessons learned that you've had from Adyen that you plan to bring to this next journey as well.
Yeah. If you are in the business of changing technology, a big challenge will be educating your users or their customers on why, and I think that isn't necessarily unique to the moment that we are now in the crypto space, but it's also true on the traditional payment acceptance side. I mean, if you go back a few years in time, like pay by bank started to become popular, and lots of companies started to invest there. And one of the challenges you had is that people just really love their cards, especially in the US. And so how do you educate consumers and businesses that instead of just continue to offer cards at checkout or wallets at checkout, that they should also offer pay by bank? And most importantly for users, I mean, why would someone use their bank account to pay for something as opposed to using their card? Those things should not be underestimated. One very effective way to do that is to partner up with very large retailers, very large merchants, very large businesses that have today control over those customer relationships. It's like a grassroots effort can eventually lead you to scale. But if you have like a very large retailer that is launching a product, that is educating consumers on how to use that product, on the benefits of that product, if they have the right incentives in place, things tend to be easier. And then it becomes a domino effect. And so a big part of what we do here is we invest time talking to those large organizations about the infrastructure that we're building, about the benefits that it comes with. And we are also working with startups. I think you have to find a balance if you are in the infrastructure side, if you are in the service provider side, because if you're solely reliant on large enterprises, it can take a long time for you to sort of see adoption and scale. And and at the same time, I mean, it is really like these small businesses that are at the forefront of innovation, and so you need those fast feedback cycles. You need to get them on board, and et cetera. And so it's just really like working with both of those types of businesses, and at the same time ensuring that the benefits are really clear. Like focus on the outcomes. I think that is the most important thing that any infrastructure provider should think about at this point in time.
And from a kind of regional perspective, there's a lot of talk right now about cross-border payments being the area of opportunity, is almost like the most broken and therefore the most ripe for evolution with the new technology that we have. How do you think about approaching that, either with your Adyen hat or even with the Lightspark hat? There's lots of different pieces that need to be put together, from liquidity to the infrastructure, and then there's educating users, building trust, building network effects. I think there's lots of folks who are listening who are probably trying to tackle the same problem, and would love to hear your perspective on how to think about approaching such a problem.
Sorry, I missed the beginning. The problem was
geographic expansion for cross-border
geographic
payments.
expansion.
Yes.
Yeah. Look, in fintech, or let me just rephrase this. Like one of the really interesting things about the fintech space is it's very cultural. Like every market you go, you're going to have like a set of infrastructure providers that sort of will operate what's happening in that market. You're going to have consumer behavior. You're going to have like a number of different things, like a regulatory environment that will make that environment very unique. And so it's very difficult indeed for businesses to expand globally. Even again, if you're trying to expand with things like Visa and MasterCard, I mean, it's not the same. I mean, if you offer Visa and MasterCard here in the States, you're very familiar with the mechanics, but then you go offer Visa and MasterCard in Brazil, and then you're going to have to deal with installments and a number of different things that are very different there, still within the Visa and MasterCard environment. And so a really interesting thing or important thing to do is to first think about what is the overlap that exists between your core, if you're starting here from the States, and that can easily be expanded to international markets, and what are the things that are really important locally. I think there are ways for you to expand internationally without setting up shop, without setting up an entire infrastructure, just to tap into that market and learn from early demand, learn from your existing user base before you double down. But ultimately, there are certain markets where you're going to have to establish like a local presence if you want to scale. Brazil is one of them. India is one of them. Japan is another one. I mean, there are a number of different markets out there that if you're not really local as in you have folks on the ground, like you have partners that can support you. You understand the cultural nuances, you understand the infrastructure locally. I mean, it's very difficult to tap into those markets and scale. Partnerships is an important route, but ultimately, again, you want to make it so you are in control of as many things as you possibly can, responsibly, so you can ensure like great customer experience. Like a big challenge for customers, for businesses that are going global, is they need to necessarily rely on so many different pieces of infrastructure, and before they know, they're dealing with like a Frankenstein of rails or integrations, and that becomes like really difficult to manage. So I mean, I would essentially focus on where there's an overlap and what are the steps that I can take that are more efficient from an infrastructure standpoint, from a regulatory standpoint, and then as you go, sort of expand from there.
Yeah, I think the cultural nuance is something that a lot of folks are underlooking and underthinking when it comes to like the stablecoin crypto blockchain space. Just because you have global infrastructure doesn't mean that user acquisition just becomes, really simple just because you have the global rails. Like the understanding like what is like the cultural nuance to like how they actually manage money, to like how they like actually use their bank accounts today, how they get access to those services are also just like critically important. And then I guess, maybe one thing that I also want to touch on would think, as this this entire space moves, that you guys also announced that you guys are day one partners for the MPP or machine payment protocol recently. Maybe just on this theme of next generation of fintech, you now have this whole new user base that is probably global, that's also hyper rational, that's now agents. Like, what are you guys thinking about? How are you thinking about the space? What gets you excited about MPP? And then what do we hope to see from Lightspark in the future also?
Yeah. Look, that space is fascinating. I think agentic commerce is in its very early days, but it certainly has a lot of promise. I think you need to look at it from two layers. Same way as we talked about the rails and acceptance and easy access before. I think you need to look at it from the same sort of lenses when you think about agentic flows. So far, what we've seen is there's been a lot of effort in building the protocols, building the frameworks, the infrastructure, so agents can transact. So they can do that securely. They can do that without say, having any issues in terms of abusing anyone's cards or things of that nature. And so I think there's been a lot of effort there. Interoperability, I think those things are important. And that space has been moving really fast. I think the in parallel with that, it's important to think about the end product. Like, how are people going to be interacting with those agents, and what levels of control will they have, and how easy will be for them to use agents to touch their finances or help them with their finances. Again, it's easy for us that are deep in tech to sort of think about assigning a card to an agent and have the agent go wild in the internet and buy stuff and go through the motions of making that work. But if you talk to the average consumer about an agent accessing their bank account, they're going to freak out. And so I think it's important that in parallel with all of the work that is getting done on the infrastructure side, that we also think about the product and the utility and the security of that product. So it becomes very so we reduce the barrier, the friction that exists in adopting new technology, especially one that touches your finance or your finances. I mean, it's something that people don't usually take a lot of risks with, or the average consumer wouldn't. And so we're thinking about it from both angles. We're definitely excited to be part of the MPP. We're working with a number of other businesses out there in terms of how to facilitate those agentic flows. But we're also thinking about the latter. Like, if we are in the business of helping mobile wallets and neobanks to spin up wallets, what can we do to enable those users to benefit from agentic technology? And so we're thinking about it as well. And I mean, in a few weeks, we'll probably have more to say about that.
And so actually, we'll have to do a quick change here. If those who are watching the video will notice that both me and Davey have changed clothes and backgrounds, but we're recording this separately to the original recording because we have some news from the Lightspark team to discuss here. So, Davey, why don't you tell us what you guys are launching?
Absolutely exciting to be back. So, if you look at how the payment industry evolved, one of the most exciting features that payment companies offer to marketplaces or commerce platforms and the like is the ability to embed payments. And so if you're selling to multiple sellers and submersions, you can now offer payments as well as your commerce business, as well as the operating system. That's been fantastic. It's moved like a lot of different very important levers in the industry, and it's been really an amazing success. That being said, for those same platforms, once they collect the funds from consumers and they pay out to those sellers, to those creators, that is typically the end of the road. At that point, the platform no longer participate in the revenue events that follow, or no longer understand what those customers or those sellers will do, so they don't have access to the data, and etc. Luckily, over the last 12 months or so, we've had a few developments in the market that allowed us to actually expand the participation of those platforms in the value chain and in the revenue cycle. What are those things? We've had the ability now for folks to have self-custody wallets that are really easy to manage, that are really secure to manage, and so that's been formidable, and there are many examples out there of self-custody or non-custodial wallets that are very accessible. Secondly, Genius has created a regulatory framework for any business to accept and manage and issue stablecoins, and so that's been fantastic too. Visa and MasterCard have become very friendly to crypto and have built amazing products on top of crypto. And finally, Spark, our L2 on Bitcoin, has scaled to handle crazy volumes and ensure that there's reliability. With all of that, again, we combined the global money movement capabilities with the ability to offer accounts to our customers and much more. So what we're launching is a global dollar account that platforms can offer to their users all over the world. The dollar balances behind those accounts can be a stable coin that this platform can issue. We facilitate that with our partners. And so that not only opens up the ability for them to offer those dollar accounts, but also create a revenue stream as they collect the yield on those balances. For customers using those accounts, they get a Visa card. We just announced a landmark deal with Visa, and any customer with that Visa card will be able to offer to buy products in any merchant that accepts Visa worldwide. Local off-ramps to over 50 countries, and so if I'm a user of that platform in Mexico or in Brazil or in Europe, I can easily go from that USD balance to my local currency 24/7 instantly. Native buy and sell Bitcoin capabilities, and so I have my dollar account. If I want to buy Bitcoin to save in Bitcoin, that's there too. Natively, it's run on top of Spark, and interoperability with other chains, which is really important. And so it's a number of different primitives that make this account global, extremely versatile, and extremely powerful for platforms, because with all of those different events, whether it's the card usage or the buy and sell Bitcoin or the off ramps, they can create new revenue streams. On top of all that, we're very excited to have made this account AI native. And so any user can plug in their agent of choice and create a pocket within that account for those agents to help them with their financial lives, their financial expenses. And so if you are a creator and you're earning money from a platform, you have those balances sitting in your account. Instead of giving full access to that agent of your account, you create a pocket within your account, say $1,000 pocket, and then you can use your agent to go buy more products and services that you need, or pay for your expenses, or even off-ramp money if you want. And so we think this is probably one of the first times that you're going to have an account that has real life utility when it comes to agentic commerce. Like it's beyond the protocol. The protocols have been amazing, but this is literally just putting in the hands of the users an account that can work securely with their AI agents of choice. And so we're really excited about all of those developments. We're talking to a bunch of launch partners, and we're seeing great traction there. So lots to be done, and lots of reasons to be excited.
Yes, very exciting. I think it's a really good example of making everything available through APIs and an entire banking platform essentially through APIs, and not just for platforms to build for their users, but for platforms to build for their users and their agents as well. So really getting on top of the current wave of developers, and I'm excited to see what people build with it. So I think the thing that I'm excited about, or the thing that I see as the really exciting thing here, is for builders. Now you've just created this API that makes it so easy to build like a neobanking experience. You've got the saving through the stablecoin, then the spending through the card, and then global payments. And so for the folks who are out there who find their niche, because you still have to compete at the distribution layer, but you find your niche and you say, I want to build a neobank that does these things, and I can go and focus on what makes me different, knowing that on the infrastructure side, a lot of the pieces have been put together. And so we're entering this world of, it's just becoming so much easier to build fintech. And that's just going to increase the proliferation of choices for the end consumer. So it's a very exciting time.
100%. 100%. Like if you look at the global landscape, all of the global fintech products up until very recently, they were offered by massive organizations with massive balance sheets and years and years and years of building licensing and infrastructure across all of those markets, right? That is obviously something that startups and builders and more nimble companies cannot replicate. It's really tough. And so I think what we're seeing now in fintech is a number of different advancements, like I said, and market developments that put us in a place where if you are a startup and if you're serious about building fintech products, like you actually have the infrastructure, you have the primitives, you have the mechanics, you have the partners that will help you through compliance hurdles, like all the way from idea to actually having a product you can sell. And so if you have infrastructure, if you have those capabilities available to you behind the scenes, acquiring users is just down to how good a service you can offer and your ability to just keep listening to their needs and helping them achieve what they want. It's no longer a game of I need to spend millions and millions and millions and millions of dollars and many years building infrastructure across every single market. And so we're really excited about what Grid Global Accounts can do because it's a big unlock. At the same time, it offers all of those primitives, right, for neobanks, for WAP, for apps, for mobile wallets to go build those experiences. It creates revenue streams for them. And so we talked about yields on the stablecoin balances, but there's more. I mean, every transaction completed in those cards will generate interchange revenue that those platforms will capture as well. When there's a buy and sell Bitcoin transaction or there's an off-ramp transaction, I mean, there are economics that platform will capture as well. We're going to share those economics with platforms and builders. And so they continue to get fuel to just keep building and building and building. And so it is an incredibly exciting moment in fintech because I think we're going to finally have competition on the basis of who's got the best product instead of who's got the biggest balance sheet. And I'm really happy that we got here.
Yeah. What a time. This is the moment for the builders, and particularly the builders in fintech. It's never been easier to embed finance or financial services and experiences in your application or actually building a net new application. And, this is just coming at the same time with Claude Code and Mythos, these mythical level AI coding abilities. It really means that we're going to see a proliferation in financial services, like wherever you see, consumer brands and business brands. So, a very exciting time. And that's it for this quick mini extra segment, and we'll return back to the original show. Yeah, it's like those two things go in parallel. You need the infrastructure to be there, but also you need people to be building innovative applications that are user-facing in order to utilize the new technology. And so, yes, it's important to build the infra so that we have the scale and capacity to achieve the things that we were looking for. But you also need to innovate right for the user and actually enable the everyday person who doesn't necessarily want to think about agent security and access to their bank account. actually just get things done in a way that is really exciting and actually solves their problems. I think the pieces are actually there right now for like a personal financial advisor in your pocket. Everyone has an iPhone. iPhones have pretty good chips. The models are there. They just haven't been strung together yet. It looks at all your investments, looks at your savings. You can kind of piece together the best features of a range of fintech apps that have launched over the last 10 years into like a mega, I don't even know if it's an application anymore. It may just be just a thing, a service. We are right at that moment. It's very exciting, but like you said, yeah, you do want to abstract away kind of the complexity, and that's, where Lightspark and other like infrastructure players come in. So is there anything else that, I think you've said in the past, fintech is 1% built. Maybe are we at 2% now? Like what are the key kind of building blocks that need to just kind of get tackled off before we get closer towards that completion?
Yeah, I didn't coin that term, but I certainly agree with that. Look, I think we've taken steps. Like I said, this is a really interesting moment where if you look at Swift, like Swift has been around for 50 years, right? And it hasn't been challenged seriously up until very recently. And even if you look at all of the goodness that exists in the stablecoin rails and crypto rails to move money around, again, if you look at the volumes that are still moving over Swift, the opportunity is gigantic. And the same applies to everything else. There are in the US alone like billions and billions, if not trillions of dollars running on checks. If you go beyond the US, there are economies in Latin America and places in Africa that are extremely cash-based. I mean, I strongly believe that all of those things will cease to exist in the next decade or so, maybe sooner than that. The question is really like, where will all of that money flow go to? Will it go to your Visa and MasterCards? Will it go to crypto wallets? I mean, it's going to become digital. And in a world where, all the money movement is digital, we are one step closer to make it so moving money in the internet is just as easy as moving data on the internet. And that is really like at the core of our mission here at Lightspark. If we backtrack all the way to the beginning of the conversation, one thing is to offer infrastructure for money movement. The other thing is ensuring that there is interoperability. Like you can really connect what's happening in the crypto space, all of the good stuff that is happening in crypto with the traditional banking systems. And so whether that's off-ramping or stablecoin back cards or whatever the vehicle is, that is really crucial. And then finally is ensuring that the users on the consumer side, on the merchant side, are really in control of those experiences and they're really comfortable with those experiences. And so I think there's so much more to be built in fintech, and all it takes is to zoom out a little bit, and you don't need to go global. Like I said, just look at the US and look at the gigantic volumes that are being processed on Swift, on ACH, on checks. I mean, all of that volume is going to transition away to digital assets and electronic payments. It's just a matter of when.
Yeah, we've got a long way to go. That's a great way to end. Davi, it's been fantastic having you here. Where can folks go to learn more about you and Lightspark?
Yeah, I'm on X at Davi Strazza. I like to write about Lightspark, of course, but also just about anything on about fintech. And for Lightspark, lightspark.com. If you want to play around with our APIs, grid.lightspark.com is really fun. And then spark.money for anything Spark related. We made those websites like very friendly, AI native. And so anyone can just take a look and start playing right away with the tech.
And what about you, Raj?
You can find me on X at Parekh and then mana.xyz.
And for me, stablecoinblueprint.com, Chuk _XYZ on X, and Chuk Okpalugo on LinkedIn. Davi, it's been great to have you. Thanks for coming on the show.
Thanks.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.